Hey everybody, Brian here from quantlabs.net. Okay, so I'm just rerunning scan after scan after scan after potential pairs that we're looking for with the various few videos I just posted in the last few days. So over the last week, I've managed to get about 32 potential pairs for long and short for equity pair trading. Now, out of that, when I modify my script that will decide if it puts on a position or not, and that's off of the watch list, there's a couple of conditions that need to be met. So let's say you have your entry, for an entry into the market, the following must take place. Each stock, both the long and short, it will have its simple moving average. Actually, it should be SMA. So when the short SMA, simple moving average of let's say 20 days, at that point crosses and is greater than the long-term SMA of let's say 200. That's so both the long and short have to have both their SMAs meet this condition, and then there's a ratio of each close of the long and short. That ratio has to be greater than the trend line as well of 20 for the trend line of this overall ratio. So when all three conditions are met, we get the following 8 positions that would meet requirement for entry into the market. Now there's obviously going to be mixed results on this, so I thought I'd go over with them. And the cool thing about it is, as this is a very simple set of conditions for entry in the market. I'm sure it's going to get a lot more sophisticated, but I'll go over them in a bit. Okay, so let's go through the first one on Yahoo Finance. So actually, let me just show you the last one while we're here. Okay, so we've got the NNI, this one right here. That is, I believe, the long, and the short is V right here. Okay, so here now, here's where it gets interesting. We have a 1-day chart, a 5-day chart, let's say a 1 month, 3 month, and even a 1 year. So this is the 1-day chart. You can see in this scenario that in green, the short is got a better price, or a higher price than the long. Doesn't mean it's outperforming. It just means that the short price is higher than the long price, but it just depends on the cross. So when you look at the chart here, this is where it gets interesting. So this is a 5-day chart, okay? Now the 5-day chart, you can see here the long being, I always got to do this, the date December 9th. So obviously right now, and the markets are hitting record highs. So everything's trending up. So you can see that the long in this case is trending faster, and then it came off here, just measuring on the slope of each price line. And then it's just slowly coming off a little bit after December 8th at around 3 p.m. there, or after here actually, but thereabouts. And then when you look at today's action, it reverses. So if I do a 1-day chart, you could see now all of a sudden the short, I don't know if it's outperforming, I don't think it is, but it's just kind of like going in a flat line. So let's say we did put on the position here, and if we look at the 5-day action, what you're hoping for is the long to eventually go back into its pace of outperforming the short. And once it diverges, then, well, I guess you could say you may make some money. So this combination is not all that great. But when you look at the monthly, I mean, this was awesome. You can see why. So if you held on to this long term, I'm pretty sure this pair would actually play out the way you would expect it. But you could see this was a really nice one with about 18% divergence, and that is over 1 month. So that's not bad. And if you take a look at, let's say, a 3-month, look at that. That's awesome. That's like a 43% move just right here from November 8th. This one's flatline. That's classic pair trading right there. So you could do quite well holding on to this position over the long run for, let's say in this case, about a month. All right, so let's move to the top of the line here. Now, I've got some notes here. So these ones play out as you would expect. So some of these do somewhat work on average. Now remember, we're dealing with eight position. So there's going to have to be a lot of analysis here. But you have to figure if you want to do an intraday play, because some of these may work. Let me just do another compare here. Okay. So once again, we have another weird situation where both these pairs are pretty well in line with each other. And you gotta remember, these are from the same industry, so that's typical. But it's these little situations here that you want to get in on. So again, if we look at the 5-day, you can see here it's tightening up. Let's see what's happening on the 1-day. There are points of where it could cross. Now here it looks like it did cross, so this may not actually be that great of a trade. But visually, what you could do as a condition is you can do a long-term and a short-term analysis and exactly look for the overall performance to see before you put on the position as an addition on the condition. Like I said, before you put on a position, is to see how they're performing against each other over, let's say, a day or 5-day. Because here, it's mixed. It's just mixed. But if you were to do a 1 month or a 3-month, it's not working out as you would want. So I don't know if this is a great stock to go or a great pair to go with. But these are sort of conditions you want to look for. That's why I'm doing it. But for now, we're just putting them out there and just seeing how it looks historically and how it pans out. Okay, so we got the MSCI. And you can also compare on the short term versus long term. So again, the PLT, this is a 1 year. See, a 1 month. So you can see here, this cross just happened. So now it looks like somewhat the long is outperforming between this period here, definitely. That's over a month. Definitely along here. That's about a 7% divergence there. But let's take a look at the intraday stuff. So here, again, not working out. 5-day. This is working out. The move is between 6%, and that was December 5th. So like 5 days ago, and then those moves are about 6%. So you could do okay here if you kind of came in here. So if we look at the let's say look a month. See here, I don't feel comfortable with that one. We just missed this one. So I'm not sure. There is potential in this pair. As you can see here, this would be a nice move. If you came in on the November 4th, held on till now, you would have been up, let's see, about a 15% return. Yeah, thereabouts, I'm going to assume. So it depends on everything. Everything for these kind of strategies is definitely about timing. So as you can tell right now, I don't think this would be a good entry. Looking at the 1 day, so we definitely got to tighten up this scenario and make it a little more intelligent. So these conditions definitely got to change. Okay, so let's take a look at the next pair, VSH. So part of the other goal is when you come to trading, I think it's really important to understand your risk management, because time and time again, people say, well, yes, you could have, let's say, 70% winning ratio, but what about your drawdowns? What if you have a drawdown of 15% over that period of time? On that analysis, 70% wins. You're right. You could probably lose it all in one drawdown, but the thing to remember is that's where you better have good risk metrics to be able to analyze those drawdown situations, because if you don't, you're going to lose your money pretty fast. And that's where I put more emphasis on your risk management and your risk outlook, and with the analysis, with the probability analysis, and a lot of emphasis on that, because that's what I'm saying. All the good traders that I've seen that are the 7-digit folks, they're usually 80% of the time is just doing that and running simulations from an automated point of view. So again, you can't just use simple metric or conditions like I said here with these two I've got listed here. There's a lot more to it than that. I'm just tightening it up, tweaking it, and praying to your Lord and eating your vitamins may help as well. Okay, so we got this new combination. We've got a 1 year. Let's see, a 1 month. Right here. Is that no? I'm colorblind here. So again, the blue is our long, and our green is the short. So let's see what's happening in the intraday 1 day. So it's not looking too not too good there. Let's see the 5 day. See they are going back and forth. So here, but it's not really worth fooling around with, to be honest. This position I don't think would be that good, but it may play out. Who knows? Here, maybe December 1st, there's a little bit of a money-making situation. Let's see the 5 day. Oh, so the 5 day, yeah, it's like I said, this is one of those wrong situations. So let's check out our next combination here. Let me just kill Skype. Okay, so we're gonna do the so reset that. Very interesting combinations, but the more analysis, the better your conditions will be when you do put on your trade. So we want to do a compare. Again, not looking too good. That's a 1 year, 1 day. That may kind of work out, possibly. Yeah, I'm not liking what I'm seeing. 1 month. Here we go. So this would have played out okay. But again, seems there's just more luck than anything, if you ask me. But it's interesting to see. Okay, so over the last 3 months, but there's a bit of divergence here. If you played here, you would have gotten a little bit of money, not much. That would have been over 3 months, so not the best pair. Okay, so let's check this out. UCCT. And we want our SIVA. Okay, so here, classic, looks good. That would have been September 27th. Could have dumped here. Oh, that's a 1 year. So let's see the 3 month. This is the sort of thing you want. October 5th. This clearly outperforms the short. That would be a nice one. Okay, so let's check out the intraday closer to it. So here, look at this. So now, oh, everything's the reverse. The long is now starting to underperform against the short. Okay, so this is the 1 day. So again, the long is underperforming. Ain't that wild? So if I reversed everything, I'd be okay. Maybe I need to follow the advice of what was suggested another time. Long the short, long the picked off short, and then short the long. That seems to be the better, what I'm seeing here. That'd be probably from what I'm seeing. And just reverse them as you put on the entry. Maybe that might be the case. I don't know. Okay. So let's do a reset. Okay. MNR. Okay. Here you go again. See, they're both co-integrated, so they're performing at the same level. Okay, that's a one. Let's check out the 1 month chart. So here we go. The long is somewhat outperformed. Oh, here we go. So they did break out, so we get some performance out of the long now. So that happened December 3rd. See the 1 day. So here we go again, right there, December 9th. So this kind of move, this is where it gets interesting. 1 kind of percent, it's a very small move, but let's say here, 32%, and it's nothing. But the thing is, if you are looking for a common goal of a 1% move on your portfolio in the up every day, and trading on the intraday, you could probably meet the 1%, but you just got to really tighten up those conditions and getting the timing down perfectly. But I think there's a lot more analysis needed, but we'll continue along the path that we're doing and see how it does. I could be wrong, but I just wanted to let you know where we're at. Later.